This time I want to start out looking at the outside markets. Let's go to the Dow Jones Industrial Average and see what's going on over there. We have a bit of a surge taking place. You have the June futures now quoted 449 points higher. We're at 32,520 right now on the Dow. So a lot of optimism there. All of a sudden, it's only 40 points from its high of the day. U.S. dollar index fairly flat, not doing much. June down 92 points at 101.985. We had a big push in the crude oil market for West Texas Intermediate crude, and now they're adding to that. We have July now $3.19 higher. I know Suzanne loves to hear that. 113.52 per barrel now, and it actually got as high as 114.05 a little bit ago. And the nearby contracts are showing the most strength. That's a bullish sign when you look at the markets. So just wanted to pass that along. That could offer a little support to the corn. Is it? Well, on the corn market right now, these quotes provided by bar chart are still lower, but they are off of their lows. July corn down 9.5 at 7.62 3/4 now. December is currently down 6.25 cents. On the soybean trade, wow, what a turnaround here. You have July now 38 3/4 higher. November up 27.25 cents for the moment. So a big turnaround there, about $0.50 off its lows. July Chicago wheat 6 lower at 11.42 1/4. If you go to the Kansas City board, you have July now $0.0125 higher at 12.34 1/2, and that would be 28 cents off of its earlier lows. So some whipsaw action in the wheat again. And in Minneapolis wheat so far today, you have July just 3/4 cent higher at 12.81 1/4. But don't let that fool you, because that's 25 cents off its earlier low. We're joined by Ted Seifried of Zaner Ag Hedge in Chicago. Lots of whipsaw action going on in almost all the markets today, Ted. It's kind of hard to get a good grasp on what they want to do here from morning till mid-afternoon.
Yeah, absolutely. I'm going to say, with the fireworks that we're seeing in soybeans, soybean oil, even soybean meal, and especially crude oil, if we close up here today, and that's a big if because the volatility's been off the charts, but if we close up here today, wow, that does so many things for the charts that you have in all of those markets. The stick in the mud is obviously corn, and export sales for corn were really poor, so corn wants to be down. Also, you have Twitter and a lot of analysts saying that the corn rally's over, it's dead, gloom and doom, going to zero. Yeah, I don't know. I don't see that. I don't think the corn fundamentals have changed dramatically enough to say that we don't have a bullish lean going into the first half of the growing season. We continue to struggle to get corn planted in the Dakotas and Minnesota. A lot of guys are switching out of corn now at this point. So, 89.5 million acres is, the best we're going to do, if I feel like. And yeah, okay. So maybe the Ukraine is going to start shipping some grain again. Maybe China's going to do some business with Brazil, but that doesn't take the business that we have off the books. I guess those sales could get canceled, but I don't think the regulations are going to be in place for that to happen from Brazil to China by the time our orders get filled for the new crop marketing year. Really, look at crude oil. That's been the canary in the coal mine when it comes to inflation. We can say 5 years ago that it shouldn't have been because people have to use crude oil to get to work. That's not really the case as much anymore. It's a discretionary spend. People are still buying gasoline. People are still doing what they want to do. People are living like they've been cooped up for 2 years. And I think that's going to continue on until midsummer or so. So I feel like this inflationary bubble has not burst yet. Yeah, okay, Walmart earnings are down, but look at Nordstrom up almost 19%. We've changed our spending. We have different things that we want to buy and different things that we want to do, but that spending's still very much happening. So yeah, corn's the stick in the mud today, but look at soybeans, look at crude oil. I don't know. I feel like there's still some more upside potential. I think things could get really rather wild here over the next month and a half, but I'm worried about what happens the second half of summer into fall. I just don't think we're there in that gloom and doom stage quite yet.
Okay, well said. I appreciate that. We'll take a quick break and we'll talk about livestock on the other side of these messages. Come on back. Let's get back to our livestock trade now, and let's examine what's going on in live cattle futures. With our quotes provided by bar chart, everything is lower, but it's led lower by the deferred contracts. So that's a little bit contradictory here. You have the June live cattle down 12 cents. You have August down 22 cents. And so it goes until you get out to February, where it's down 50 cents right now. Now, if you go to the feeder cattle market, With the lower corn, it's still not getting any traction. In fact, we're sliding now. You have August feeders down $1.50 at 166.45. Well, that's $2.12 or so off of our earlier high of the day. We're almost on the low now. And September down $1.37 on the feeders. Well, on the lean hog market, you have June up 25 cents now at 109.30, so it's regrouping after dropping earlier. And July now up 80 cents at 108.75, so that has gained back about $2.25 or so now off of its earlier low. So we're going opposite directions. Ted, what's going on with the livestock?
Yeah, it's a really disappointing day. You're right. Feeder cattle down, following through from the turnaround versus lower day yesterday. After it did reach some very key resistance, and we are trying to carve out an overall bottoming formation after having a little over a month-long slide off the highs. So, a lot of it's technical in nature, but yeah, corn's down. Why aren't feeders higher? That's a bit of a problem. And then also, like you were saying at the beginning of the last segment, sharply higher stock market. It's a risk on day. You feel good about consumer demand today. So why aren't we more excited about beef demand and so on and so forth? You can't say that export sales weren't great for beef. So maybe that's a bit of a stick in the mud. I want to say, though, I think this is overall a technical deal where, you can't just have a V bottom. This is more proving out that we are trying to put in a bottom here at this point. And I'm optimistic that this is the right value level to do so, especially with cash holding a bit of a premium. Let's talk about something better. Look at hogs. Hogs have had a nice reversal low or off the lows here today, pushing higher once again. Again, a nice bounce off the lows overall on the hogs, ran into overhead support, pulled back. But this turnaround that we're seeing today is really, I think, pretty good. And it's what we should be seeing, So I like the hog chart. I think there's more upside potential here.
Well, very good information. Thank you, Ted, for joining us. Appreciate it, sir. Ted Seifried of Zaner Ag Hedge with us here on a Thursday morning. Suzanne, back to you.